Hey everyone, welcome to another video on my channel, and today in this video I am going to discuss about how I am approaching trading in the year 2025. So if you look at 2024, from 2024 to 2025, we have changed a lot of things. So currently we are focusing on working something very systematically without bringing in a lot of discretion. So in this video I want to share the exact same thing, how I was trading previously and how I am trading now. So how I am approaching market and what is that I want to get out of market. Before moving on, you can also go to QuickAlpha.in and check out our various services. So now when you come to the screen recording, so in 2024, I was primarily focusing on trading options. So the idea was very simple. With options, I want to achieve somewhere around 20%, and with equities, I want to achieve somewhere around 10%. So my 100% focus went into trading options. I used to do expiry trading, some amount of intraday trading, and some amount of positional trading. So the whole focus was concentrated into trading options. So equity is one part which I didn't focus at all. So the idea of equity was pretty simple. So put some amount into Nifty Bs, large caps, or SGBs, gilt. So mostly something very stable where I can easily end up making somewhere close to around 10% per annum. So the idea was options plus equity should yield me around 30%. So this was the basic idea which I had when I started trading. So this went on very well for me because if you see my CAGR from almost 2021 to 2023 end, so almost close to around 21, 22, 23 end, right? So 3 years it has been close to around 29% CAGR. So 2024 is one such year where I lost nearly around 2 to 3% from options, but equities I was not able to make a lot. But with futures, I ended up losing a lot. I have already made a video on that, so you can check that out. So if you take a look at my performance for the last year, so it was quite subdued because by the end of December, even equities had come down, and also my option performance was also in a loss. So overall, if you take a look at it, I think I was more or less flat. But the thing is, this year really hit me with all the spikes. So if you take example April 18th, where we saw the biggest spike in Nifty, so that single day I had nearly 5% loss, right? And also a 4 to 5% loss. And if you see many other days in the month of March, in the month of June, where stop loss used to jump, right? So when I started looking at all of that, so I started to realize maybe the game in trading is changing. So it is no longer the same, right? So at least when it comes to expiry day trading, so now the field is pretty crowded. So everybody wants to sell options, everybody wants to sell OTM options, put a stop loss and go, right? So I sort of knew to get the additional alpha out of it, it would start to become more difficult as we move on, because a lot of people would be coming into option selling. So back in the day when we started, hardly anybody sold options, so it was a pretty easy thing to work around. So you just go sell options and you could make money. But today, every single person who is into trading is selling options. So post that, in the month of October, November, SEBI brought in new guidelines like removal of weekly expiries and much more. So looking at all of this, so our team at QuickAlpha, so our trading team consists of me, Siddharth RK, Siddharth VK, Avinash. So all of us put together, we started working on some solid models which can be entirely automated both with equities and F&O. So the idea was pretty simple. So this was one place where we had not even focused. So this is something which started from June or July. So it's been over 6-7 months where we are consistently working day in, day out on building solid models with equities and F&O. So this was one particular thing which we hadn't even laid our focus on, right? At this point, when we saw the data, the top tier mutual funds, so you can say Parag Parek FlexiCap, Quant FlexiCap, and also the top performing mutual funds were easily able to beat the benchmark by a huge margin. So if we are talking Nifty delivering somewhere around 13%, so the top tier mutual funds used to deliver around 22 to 23%, right? So they used to beat Nifty by a pretty huge margin. So this was something which actually sparked an interesting question within us. right? So when these funds managing thousands of crores, right? So when they are managing 70,000 crores, 50,000 crores, 40,000 crores, when they are able to beat the index with such a huge margin consistently over 5 to 7 years or even 10-year period. So can we work on something to beat these mutual funds as well as the index? So to be honest, mutual funds or any PMS for that matter comes with a lot of restrictions. So let me just list out these restrictions to you so you will get an idea on how many restrictions these mutual funds will actually have. So the very first thing is mutual funds cannot own more than 10% in any particular company. So they are restricted to cap of 10% in one company. So which means they have to have at least minimum of 10 stocks in their fund. So they cannot own lesser than 10 stocks. Second one, let's say you go into any equity mutual funds, right? During the falling market, these mutual funds cannot go into debt, right? So the thing is, mostly what happens, a typical cash holding of a mutual fund will be somewhere around 5%. So in case of Parag Parag FlexiCap, it had gone to the highest level of 16%. But still you can see that in any equity fund, whether the market is coming down or coming up, they will have at least 80% in equities and remaining 20% in cash. So this is the worst case I am telling, right? So mostly it will be 5% in cash, 6% in cash, 3% in cash. So almost all the money would be invested in equity itself. So this also causes a disadvantage because as and when the SIP is flowing, they cannot hold the money and wait to invest. They have to compulsorily put into the market. Next, the third major disadvantage they face is their size. So if you take a look at it, so these mutual funds, when they have 10,000 crore, or let's take example of HDFC. So today HDFC has somewhere close to around 4 lakh crore, right? So or upwards of 4 lakh crore if I'm not wrong. So 4 to 6 lakh crore is what they have as their AUM, right? So now let's say you are talking about HDFC fund. So can this HDFC really make a substantial investment in a small cap company? For example, let's take any small cap company which is trading around say 8,000 crore, right? So this is a small cap company, and if HDFC have to make an investment in this small cap company, so they can't obviously end up owning the entire company at 8,000 crores. Max to max they can own is, let's say, 10% of this company, which will come to 800 CR. So this is the highest holding that they can actually have. So if they tend to go something like 1,600 CR or 2,000 CR of holding, it would be exceeding more than 25% of the entire company. So now, out of a 4 lakh crore AUM, just imagine you have just put in 800 CR to a small cap company, right? So even if this company is going to tomorrow double and go to something like let's say 16,000 CR or 24,000 CR of market cap, so their overall return is going to go to 2,400 CR, which is not even 1% of their AUM. So by default, as the fund size increases, capital allocation becomes a big issue because they cannot go and invest in any company like how we can do. Let's say today I have 1 CR, 2 CR, 3 CR. I can simply go and invest in a 8,000 CR company. Let's say I want to put in 20 lakh to a 8,000 CR company. I can easily do it without even worrying about it. But if these people have to put in a substantial sum into small companies, it is going to be a big challenge to them. Next, the fourth one is these mutual fund houses or PMS cannot go into derivatives, right? So they cannot go and trade Nifty options, they cannot go and trade Sensex options. So they are not allowed to get into derivative market, right? So now you see that these are some of the biggest restrictions which these fund companies have. They have to have not more than 10% in a particular company. So these companies cannot sit with cash. So as and when the SIPs are coming, they have to keep on investing. So as and when the size increases, asset allocation becomes difficult and they cannot access the derivative market. So given all of these restrictions, if these companies or these mutual fund houses are still able to deliver upwards of 20%, right? So they are delivering upwards of 20%. So what is stopping us? So why can't we try to do something without all of these restrictions, where we can try to aim upwards of 20% with no such restriction? So if I'm aiming at 20% itself, then I can rather go with these funds itself. The idea I should be focusing on is to try to get more than 20%. So keeping these core things in mind, so we started developing an approach where the idea was to keep the portfolio slightly concentrated. So today, if you take a look at Warren Buffett, who has achieved nearly 20% CAGR for the last 50 to 60 years, he has been able to do that only by maintaining a concentrated portfolio. At one point, he had the highest holding in Coca-Cola. At one point, he had the highest holding. More than 50% of his holding at that size was into one company, and that was Apple. So there have been multiple times where hardly close to around 4 to 5 holdings of his has covered 80% of his portfolio. So he mainly believes in holding concentrated bets. And one thing what we can do is try to follow Buffett, right? So try to have some concentrated bets in our portfolio, and that is the first thing what we started focusing on. So the second thing, so we also started working on some indications, or we started working on some factors where we decide to liquidate our portfolio and sit with cash. So today we have developed a model where not all the time we will actually be sitting on stocks. So in case if the market is not in our favor, we'll be also moving to cash. And next, we don't have any issue with capital allocations. Quite easily we can target Nifty 500 or Nifty 750 companies without any issues. And finally, the fourth one, we also have access to derivatives, so which means we can try to enhance our return by trading derivatives. So given all of this, for the last 6 months, so Avinash, Siddharth and all of them together have sat and literally worked on quite a lot of things which are now totally automated. So we as traders today are only putting 80 to 90% of our work today in research, right? So 80 to 90% is going in research and only 10% is going in trading. So before, we used to sit from 9:15 to 3:30 in front of the screen, but today 90% of our work is actually consumed in research, building solid models. So this has helped us in quite a lot of way. One is just to remove our pressure of trading and trying to deliver performance. Plus also come with some fantastic models which can entirely be automated, and you don't really have to work on trying to manage your trades, trying to adjust your positions. So this is again into research, right? So the idea now has slightly pivoted, right? So how we had our full concentration, or how we had our full focus on options. So today with options, we want to make around 10 to 12%, and this we are mostly doing with trades which can complement our portfolio. So today we are focusing mostly on portfolio building and option strategies which can work in complement to our portfolio, which means if Nifty is falling, we want to ensure that our options give us extra returns, and if Nifty is going up, we want to ensure that so we don't lose a lot. If it's range bound, we want to ensure that we also end up making money with options. So our primary focus today has shifted from options generating us the active income to options getting us the passive income. And today we are focusing on equities, where we are focusing on models which are again quite concentrated, and we have added different factors like value, momentum and much more, right? So these models can help us get anywhere upwards of 18 to 20% CAGR. So this is the core focus what we have. So net to net, you can see that we are coming to again around 30% itself, but this 30% is totally different from the 30% what we were doing previously. So previously, to achieve the same 30 or 35%, we used to spend 6 hours in front of the screen not doing anything else. So, and the thing is, I started to feel the same thing, we are actually going nowhere. So you will definitely grow, but how long can you sit in front of the screen? Maybe next 3 years, next 5 years. So the things have to move on, and end of the day, Human learning capacity is limited, whereas machine learning capacity is unlimited. So a machine can keep on learning and adapting, whereas human, so there will be a lot of psychological biases which will be coming in. So the thing is, in this entire thing, we also want to get in people, right? To QuickAlpha website today, we have something called as the learning path. So this, we want to encourage people to take this in case if you have a capital of upwards of 25 lakh to 50 lakh and you're interested in systematic trading. So this is open only for 6 people. So we don't want a lot of people to come in also. So the idea is very simple. We want to work together. So we want to share ideas. We want to collaborate in a way where we can start executing it and building something solid. So we want to build a traders community of building something really solid. So in this, again, as I told, we want only people having capital of 25 lakh or 50 lakh upwards, because that is where you can make the best use of it. Because this is going to be a 2 to 3 day thing where you will be coming to the office, right? So you will be coming to our office, and it is going to be more or less a collaborative way where we will be sharing everything that we are working on, and we would also like to get your views on it. So we alongside also want to create support groups to try to understand the core problems of traders. So we have a psychologist in-house, we have traders who want to be part of this support group in-house. So we want to work in a more or less collaborative way. So you can check it out. So maximum people we want to take at any point in time is just 6. Experiment which we want to start off and see how it goes. So in case if it works very well, so we want to continue doing this with smaller crowd. So you can definitely check it out by going to QuickAlpha.in and going to the learning path section. So with this, now I will tell you what the primary focus has been for us. So if I were to just show you, so these are some of the different variations that we have worked over the last 6 months. So for example, if I just take a look at the trailing buffer backtest, right? So here we have multiple variations. Again, let's say there are different rebalance periods. So let's say there is a quarterly rebalance, monthly rebalance. And then if I just open up any particular data, right? So you see that we have worked on various different things, various different strategies, various different combinations. So each giving us different CAGR, different drawdown periods. So these are some things which we are actually working on now. So we want to keep this whole thing automated. So in a way where, so the system is just going to pick the stocks for us and tell us when to rebalance, and we just end up doing that. So coming to option trades also, so we are working on a systematic approach which is going to complement our portfolio in a way where if the market is falling down or range bound, we want to make money, and if the market is going up, so we will end up losing, but it will get compensated with our portfolio. So that is the core idea. The core idea is to have all of these which a mutual fund house cannot have. That is a concentrated portfolio to sit on cash whenever the market doesn't look strong. So there are a lot of factors which we have added into the model, like momentum, growth, value. So along with this momentum sentiment itself is going to filter out stocks and make sure that in case if no stock is in momentum, so it is going to remove all of it and keep us or keep our portfolio in cash. So then coming to the derivative segment, so next we are also starting to work on stock derivatives. Try to recently we got the data and we have to start working on models with regards to stock derivatives. So completely you can say that we have moved into discretionary to something very systematic. So something systematic in a sense where even though the execution today is manual, 80 to 90% of our time is going into research, and maybe 10 to 20% of that time is going into following the market. So as I move on, every month end I'll be doing a monthly performance video as to how that particular month performed. And what I want you to also focus is try to use this as a framework maybe if possible, and see if you can also start building something on these lines. So it actually comes as a surprise, right? So these companies managing such huge corpus are able to easily beat Nifty by 7 to 8% over the course of 10 years. So it is not just once. If you take a look at Parag Parikh fund for the 3 years or for 5 years or all time or 1 year, right? So it has consistently outperformed Nifty. Even for 1 year, if you take a look at it, Nifty is hardly up by 3%, but this is up by 14%. So all time it has consistently delivered close to around 20% CAGR. So this is something which is very difficult to do as your fund size increases, and if they are able to do it, right? So when we have no restrictions, so you don't have to compete with the fund manager is what I'm saying. So the fund manager is really off the charts because he's able to do it so consistently, but he's doing with so many restrictions, and with us having no restrictions, so we can definitely try to do something. So we don't even have the capital constraint what these people have. So that is the primary focus today, and I want to take you through this journey on what we are trying to build and how things are going with us. So whatever it is, as you guys already know, whether it's a profit or a loss, I will be posting it as to how things are going. So in case if you are interested to also be a part of this, so you can just quickly head on to QuickAlpha.in and you can check out the learning path. Thank you so much for joining, guys, and see you soon in the next video.